Sonic just survived the most violent liquidation event in crypto history. Over $20 billion wiped out in hours. The token dropped to 7 cents on some exchanges. Now it's back at 16 cents, and everyone's asking the same question. Is this the bottom, or are we catching a falling knife? The data says something surprising. The chart tells a different story. And the team just made a move that changes everything. Let's break down what's actually happening with Sonic right now. October 11th shook the entire crypto market. Sonic wasn't alone in the bloodbath, but it felt the pain harder than most. We saw prices collapse to 7 cents on certain exchanges during peak panic. That's a staggering drop from where we started the year at 99 cents back in February. When leverage unwinds this fast, fundamentals don't matter in the moment. It's pure liquidation mechanics. But here's what's interesting. Sonic's network never stopped. 0 pending transactions throughout the chaos. Hundreds of transactions per second sustained for hours. Near-instant finality. Sub-cent fees. While other networks struggled to stay online, Sonic operated flawlessly. The infrastructure proved itself when it mattered most. Let me walk you through what I'm seeing on the weekly time frame. We're currently trading around 16 cents, sitting inside a descending channel that's been in play since February. This channel has rejected price 3 times now. May, August, and most recently in October. The Fibonacci retracement from the February top at 99 cents, down to current lows around 16 cents, gives us clear levels to watch. The 618 retracement sits at 67 cents. That's a major resistance zone if we start climbing. Right now, price is below both the 10 and 21 period exponential moving averages. The 21 EMA is around 30 cents, and that's the first real hurdle for any bullish momentum. Until we reclaim that level, the trend remains bearish on this time frame. The Fibonacci RSI indicator is deep in bearish territory, extremely oversold, printing its 8th consecutive red candle. Historically, conditions like this precede a reversal. The volume profile shows a point of control at 30 cents, which acts like a magnet for price. That's where most trading activity has occurred, and it often pulls price back toward it. My accumulation zone, marked in green, runs from 14 to 20 cents. We're right in that sweet spot now. The risk-to-reward ratio looks compelling here, even though the price action looks terrible. There's not much downside left, in my view. My invalidation level for short-term trades is a weekly close below 13 cents. That red dashed line is where I'd admit the trade isn't working and step aside temporarily. For long-term holders like myself, I'd look to reaccumulate around 11 cents if we broke lower. My 5 take-profit zones are marked in green circles. 35 cents, 45, 65, $1, and $1.50. I start trimming 25% at the first target. Once the first target hits, I move my stop loss to break even. This makes the trade risk-free from that point forward. Each subsequent target hit, I move the stop up to the previous target level. It's a trailing strategy that locks in profits while leaving room for bigger moves. While price has been brutal, the fundamentals keep building. There are now 50 projects deployed on Sonic across lending, decentralized exchanges, stablecoins, liquid staking, and more. Silo Finance is generating over $2.5 million in fees over the past 30 days, with fees up over 100%. Shadow, the decentralized exchange, is doing $1.4 million in fees despite market cap compression. Aave deployed on Sonic with over $676,000 in fees and nearly $4 billion in market cap. These aren't hypothetical projects. They're live, generating real activity and revenue. Sonic now ranks 4th among all Layer 1 blockchains in earnings over the past 6 months, pulling in over $410,000. That puts it ahead of 95% of chains. For stablecoin supply, Sonic is 10th among all blockchains with 142 million in ecosystem stablecoins. Transaction count over the past 6 months shows 85 million transactions, ranking 20th across all chains. Total value locked sits at $408 million, placing Sonic 11th. These aren't vanity metrics. They show sustained usage despite terrible price performance. The core developer count has held steady at 14 developers working on the protocol consistently. That's 30th among all blockchains, showing continued technical commitment even through this downturn. Here's where things get really interesting. Mitchell Demeter, Sonic CEO, posted on October 11th, right after the crash, reminding everyone that fundamentals haven't changed. Strong balance sheet, best-in-class technology, mission built for the long haul. But they didn't just talk. They acted. The Sonic team added over 30 million more tokens to their treasury, purchasing roughly $6 million directly from the market. They believe this delivers stronger long-term returns than sitting in stable reserves. That's conviction, not just words. Sonic emphasized that while most networks struggled during the crash, Sonic operated flawlessly. Zero pending transactions. Near-instant finality. Sub-cent fees across every decentralized exchange and application. And they stepped forward with that $6 million open market buyback, increasing treasury holdings by over 30 million tokens. Performance and conviction, side by side. On October 18th, Sonic announced USDC is now live on the network through Circle Gateway. This enables unified USDC balance across supported chains. Builders and institutions can now access instant cross-ecosystem liquidity, making Sonic a stronger hub for global finance. This might seem like a small technical update, but it's a major infrastructure piece. USDC is the backbone of decentralized finance, and having native integration opens doors to institutional capital and serious DeFi protocols that require stablecoin liquidity. Look, I'm not going to pretend this price action isn't painful. Most holders are sitting on losses, unless they've been dollar-cost averaging through major dips and took profits during the February and May rallies. The chart is bearish. We're in a descending channel. We're below key moving averages. But the risk to reward at 16 cents looks different than it did at 50 cents or 90 cents. There's not much left to lose, and the fundamentals keep improving. 50 projects, over 400,000 in earnings, 10th in stablecoin supply, 20th in transaction count. The network performed flawlessly during the worst liquidation event in recent memory. And the team just bought $6 million of their own token from the open market. That tells you something about where they think this is headed. I'm building a long-term position here because I believe in the project. That doesn't mean you should. I'm not a financial advisor. I'm just sharing what I'm doing and why. If you found value in this breakdown, hit the like button. Subscribe if you want more honest takes on crypto. Join my free Telegram group. Link is in the pinned comment. And check out my previous 2 Sonic videos. Links are on screen now. There's more context there that might help you decide what makes sense for your situation. Thanks for watching. See you tomorrow in the next one.